This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of December 19th, 2023, the next to last week of the year. And a very busy week it was. Lots of markets to keep track of, and of course, if you're going to follow the precious metals, you've got to keep track of all markets. So in our daily podcast, we're not only checking the precious metals, we're looking at the dollar index, the bond market, and the stock market too. Any weakness in equities sometimes bleeds over to the gold miners and also the precious metals themselves. So we keep an eye on the stock market, and we began the week talking about it as the S&P 500 had hit a fourth point on its downtrend line, and now had fallen below its 50-day moving average as well. How much farther would it fall in the days ahead? Well, that was all part of what we discussed Monday, December 19th. Look at stonks. I mean, this is just, ever since that peak a week ago after the CPI, where it tried to get all the way up to 4,100, we hit 3,800 today. That's 300 points in the S&P. 7% in 5 days, fallen fast. And again, as we talked about last week, if you don't think the stock market can go down in December, I'll remind you what happened in December of 2018, where it fell 16% in the first 3 weeks and prompted that Christmas Eve meeting of the plunge protection team and Powell pivot number 1. Now you got people coming to the discount window. Who knows what's going to happen? You can clearly see why it bounced from 3,800. 3,800 had been resistance in September and through most of October, and then it became support. So it was logical that it would bounce there. Maybe it'll trade back up toward the 50-day, because it's due to have a green candle at some point, and then roll over and go to 3,700 or even 3,600. As we've been telling you, drops from that trend line have been 20%. The one that began in late March, the one that began in the middle of August, both of those about 20%. A 20% drop from this most recent tap would take us down to 3,200. I think that's very much in play. So we'll look and see what happens tomorrow, see if there's a chance to buy some puts again. Precious metals surged higher on Tuesday, December the 20th, and we certainly talked about that in our daily podcast. But one of the things we've noticed lately was a divergence between the price of COMEX silver and the price of the SILJ, which is an ETF full of junior silver miners. As you can see on this chart, they generally track each other very closely, with the SILJ in candlesticks and COMEX silver as a blue line. However, since the first of this month, a divergence has opened, a very wide divergence. What the heck's going on here? What is causing this? All part of what we discussed Tuesday, December 20th. What you see here is a blue line on this chart. That's silver, COMEX silver. Okay, and going back to the first of the year, you can see it's now up on the year. But the SILJ began the year up here at 12.5. And as recently as the end of November, the pattern of silver and the SILJ trading almost tick for tick held. But then beginning at the first of this month, silver's gone from 21.5 to 24.5. And the SILJ has gone down. I mean, look at this. I mean, they are right on top of each other until 3 weeks ago. And now this massive divergence. So, silver going to pull back? Is this SILJ telling you silver's just going to plunge right back to 21? I don't know. Maybe. Or is there some huge opportunity eventually for the SILJ to catch up? Because what if silver keeps on going into January? Like I said, up to 26, you got to figure the SILJ is at some point going to play along. But for now, that's extraordinarily frustrating, especially if you hold shares of First Majestic or PAWS or really anything that has anything to do with silver. We focused on silver on Wednesday, December 21st, as we noted a very important technical pattern developing. More on that later in the week. But notice silver had made another slightly higher high, and notice that the moving averages are about to converge bullishly. Again, all part of what we discussed December 21st. And your final chart is COMEX silver. Again, getting to 24.50 has made slightly higher highs versus early last week. And now we'll just see, can it continue to at least stabilize here, remain green on the year, and then move higher late this week And during the 4-day week next week, remember, everything's closed. Observance of Christmas on Monday, so there's nothing going on Monday. So there's only 4 trading days left in the year once we get to next week. But notice, lastly, how close we are now to having that bullish cross. That 50 days moving up very quickly. It will cross the 200-day. Probably within, early next week, I would suppose. So we'll be watching that closely, and we'll see if that has any immediate algo impact, because we haven't had the 50-day above the 200-day since about, April? So we'll watch for that too. And then Thursday brought another big smash in the COMEX metals. Silver went down, but gold fell too, in a pattern we've seen 2 other times already this month. A big rally on new increase of spec open interest buying. You go sideways for a day. And then on the 3rd day, a big smash. Again, 3rd time that's happened this month. Very frustrating to watch. Seems designed to prevent gold from getting above and staying above its 200-day moving average, as you can see on this chart. Anyway, it's a very frustrating day, but it is what it is in the precious metals, and it's all part of what we discussed Thursday the 22nd. Well, here's your daily chart. This is what I was telling you about earlier. First day of the month, $30 green candle. In fact, let's just tell you know what? I'm going to pull up my open interest spreadsheet so I can make sure I give you all this. Actually, it was $55 on the first day of the month. Open interest that day and the next day rose considerably. Actually, it went up 12,000 contracts that day. We were up $55. Then we go sideways. Little open interest bleeds off. And then open interest sees 14,000 go out on that big red candle on the 5th, down $28. Well, let's see if we can play this game again. On the 13th, gold goes up $33. Open interest that day goes up 13,000 contracts. Price goes sideways to down for a day. Open interest then goes down $31. Price goes down $31 and open interest collapses by 10,200. And now today. You go back to Tuesday, gold up $28. Open interest rises 12,000, another 5,000 yesterday for 17,000 up. And with price going back down $30 today, probably washed out 15,000 back out. You can see it in the chart, up, sideways, down. Goes, trades for about a week, up, then sideways at the 200-day, back down, smash back down below it. And then Tuesday up, trades above it again, sideways for a day, and smash back down. If you can't see this, what's going on here? Banks absolutely screwing the specs, fattening up their bonus pools here in December for the end of the 4th quarter. At the same time, keeping price from breaking out above the 200-day. I mean, if you can't see that, I'm not sure how I can help you. And on Friday, December 23rd, COMEX metals bounced back from that ridiculous beating they took on Thursday as more stagflationary data was released in the final data dump of 2023, and we are getting ready to head into the final week of 2023. And one thing you'll want to watch next week is what you see on this chart. This is COMEX Silver, the March contract, the current front month. As you can see, on Tuesday, of course, market's going to be closed on Monday, but on Tuesday, you're going to see the green line cross up through that red line. That is the 50-day moving average, bullishly crossing to the upside through the 200-day moving average. Now, as you can see, when they bearishly crossed back in June, price then fell from $22.50 to about $19.50 in 4 weeks. So could we be set for a technical bullish signal come Tuesday when trading resumes? It'll be something for you to watch in that holiday shortened final week of the trading year. This is your final TFMR podcast highlight show for the year as well. Hopefully you've enjoyed this feature, and it gives you some idea of what we do at TF Metals Report. It's going to be a fascinating 2023. Pretty good year for the metals as well. So I encourage you to check out TF Metals Report and consider subscribing. Now's the time to do it. With such a strong year for the precious metals on tap, you need as much information as you can get, and you can find it all at tfmetalsreport.com. Happy holidays and Happy New Year, everyone, and we'll speak to you again in 2023.